4 o'clock in the morning and you already know what kind of price action you have to expect. Hello everyone, how are you doing? We're gonna step up the game a little bit. The last session, after I did the session, I was checking what was my real-time result in the week we backtested. And I figured that I had like 15 hours in this week. And we ended up the backtesting session with around 45 or 49, I don't even remember hour. Please keep in mind when you do backtesting, that's not really like live conditions. So there is backtesting and there is forward testing. When you do your testing, your backtesting, the results will be always better than they will be in a live scenario. Because first of all, for me, I rarely trade the ADR session. I'm normally not awake and I'm not in front of my computer to trade the ADR session. Secondly, everybody has a life, so even me, I'm not sitting 12 hours in front of my screen and waiting for every minute that I get a setup. So that's why the backtesting result is really not matching what you will achieve in a live scenario. So and today we're gonna be a little bit more precise. So we're gonna go and not trade the ADR session. We're gonna use the ADR session to work with the relationship models of ADR, ODR, and RDR. And I'm gonna talk a little bit about that, what I'm seeing and what I am thinking as usual. So we are not trading the ADR session. I'm just talking what I'm seeing, what I'm thinking about it. The ADR is another 3 more candles. So what we see here, like if we look to the left, we are in the previous RDR session. We are slightly above. We are not going below the midpoint. Could be potentially an upside expansion model forming. So let's see how price is reacting. We have some nice rejection from this level over here. We have a confirmation to the downside. If we would trade it, we would look for a short entry. So you see we are closing slightly above the midline. So no rejection till now. This could be considered a rejection. We are going up again. We are staying above the midline. So nothing interesting yet. So we're going down, we're making a new low over here. Nothing I would have traded even if I would trade the ADR session because there was not really any clear rejection from the midpoint. We are not in any interesting level here. The high of the DR of the RDR session here, it's not giving any clear indication, so I would have not traded anything there. And we are gonna go now into the ODR. So let's look again. Let's look at the models. We have seen an RDR session which expanded to the upside. So Friday is normally a trendy day. When you trade on Fridays and you see in confirmation to the long side and the market is going up, you can expect the price to trend into one direction. So Friday is a very good day to expect price to move in one direction and not gonna be so choppy. So what we see, we have slightly going above the RDR. We are not going below, so we don't have any more information yet. So we have to wait what the ODR will tell us now. So ODR is doing what now? Contracting, exactly. We have a contraction inside the ODR, contracts inside of the ADR session. So what we expect is a price action which will take out the top. So I'll draw some line. We are expecting price action which looks like this. So we expect maybe this gap to be filled that we can mark here. So here we have the opening gap from the weekend. 90% of the traders out there on a day when this price action is really coming through, people lose money because they get stopped out. They think price will go down more and they try to trade the breakout. But at the end of the day, price will turn around and will collect all their stops. And then when it goes above these levels, people will try to enter again because they're thinking, okay, I got stopped out. Now we are breaking out to the upside. So they say, okay, this is a fake. So I'm going to enter and I'm going to go long. And then there is a high probability that price action comes down. And what is important for you and what is the easy way to spot this kind of price action is really the contraction model. So whenever you see one session, one DR session inside of the previous DR session, that is the first sign for you to think about this kind of price action. That's going to pay you big time. So we have not even, what time is it now? It's 4 o'clock in the morning and you already have an idea how price action will behave. I can't state this even more. Like if you study these relationships, not only the contraction, all the models we already talked about, it's going to give you like people talk about buyers, people talk about knowing where price is going. This is really what buyers in a lower time frame looks like. It's 4 o'clock and you already know 4 o'clock in the morning and you already know what kind of price action you have to expect. The conclusion is very easy. So you're not going to wait for targets. Like let's say you enter a short trade, you know that your target and your take profit for trades should be somewhere around these areas where there is lows. So you're not going to take profit targets which are down here, the midpoint or something like that, because you already know you're expecting price to collect everyone who has his stops down here and then go up or the other way around. I don't know what will happen, but at the end of the day, we know whatever trade we are entering, we are not going to go for high price targets because it's most likely that the price will turn around in some point and collects the other side. I can't stress how big this is for you as a trader. So if you master this one, it will give you so much clarity about what you want to trade, how you want to trade, and how you want to use DR later on in the levels to trade. I'm expecting some sweeps to the downside, and then I'm expecting price to go the other way. So we are collecting this low, nothing for me to trade. Just mark my words, what I said to you. Now, what we expect. So price goes up and goes up to the DR level. If this would be not a contraction model, I would take a short right here. That would be enough for me because we are exactly stopping at the DR low. I see some reaction on the candle. So if this would be a normal model, not a contraction model, I would take a short here. So right now I'm waiting. Immediate rejection, immediate price comes down. And that's the power. Look at the level. That's all you have to understand. Like it's really basic stuff and then focusing on price. Trading is looking at the moment. Like it's so important to be at any second with price. And you see, sometimes you don't have a long time to think about it. There is a decision to take once the candle is here, and then in life you have a little bit more time because the 5 minutes are forming here. And that's why I also tell people not necessarily start with the 1 minute chart, because this 5 minute candle, it gives you time to think about what you see. Until the 5 minutes is over, you don't have to make a decision. You can wait till this candle is closing. You see that the rejection has substance, and then you just enter with the next candle. So when this is closing here, you have your confirmation. You have seen 5 minutes of price action, how the price was acting around here. Unfortunately, I didn't take the trade. We see another new low. Price is immediately coming back up. This behavior, so we take out sell side liquidity, immediately we go back. We take the next sell side liquidity, or we take out whatever sell side liquidity was here, and immediate rejection from down. So that also tells you a story. That tells you that price yet is not ready to go down more. Because like whenever you see this after a new low is taking and you see this, then you know that we are not ready to drop down. It tells you that the algo wants to drive higher. He wants to go up and collect some liquidity over here, most probably even in the higher areas. So we have a nice volume imbalance over here, by the way. Here is another volume imbalance. And we don't have a necessarily volume imbalance on top. You see this volume imbalance is here. Like I just turn on the indicator. So this price action then also could give you an indication to take a trade over here. Because like first of all, you're looking for a short trade. We have confirmation over here. So this two volume imbalance will tell you that price at least wants to go down and close these two volume imbalances. So as we see, we get the volume imbalances filled. So both of them are touched. Here we have a second one and price turns around again. Learn how to see them without using any indicator or script, because it's important to see them with your eyes. I mean, I was looking at them for 20 years, so it's a different story for me. Seeing them when price is happening is much more important than having a tool which is drawing out the volume imbalances for you. Nice rejection from the IDR levels. We are still waiting because of the ADR model. Volume imbalance over here, volume imbalance over here. Nothing interesting yet. It's already 8:30, so session is over, so no trade for me. I'm still, based on the two models I'm here, I want to take a long trade. Took almost like everything which is in close proximity on the sell side. So I would look for a long trade as long the ADR confirms that, or I'm looking for an entry while the ADR is forming, depending on what we see. So now we go to our script, and that's working for yourself. So you go extend ADR, ODR lines. That's what I'm doing right now. So now we are looking for a long trade and see if we can get a nice one. Okay, we are going lower. Now we have 9:30, we are opening, we are building the ADR session right now. So, and look where we are right now. So we are here, we have previous ADR session, what a volatile day. So we go up, we are rejecting from nowhere at the end of the day. This is the opening price from the previous ADR session. Price comes up and goes down immediately. So still nothing interesting to trade. And it goes lower. So we're taking out again sell side liquidity and we are going more up. So nothing interesting yet. Still nothing interesting. Yeah, we're just going higher. So now we are doing gap close and we are closing the volume imbalance over here. There is another one on top of this one, by the way, if you have not seen it here. 10:15. So look what we have over here that I like. So we have a volume imbalance over here and we have another one over here. Look at how the volume imbalance is matching the DR low from the ODR. And here we have another volume imbalance. So let's see. So still my plan didn't change. I'm expecting price to go up and take out the areas above here. Let's see. But we want to have a retracement. So we had our contraction into expansion. You see that? You remember the lines I had? And look what price did now. You see that? So let's see. So price is touching the first volume imbalance over here. And this is a very nice rejection. So I'm gonna go long. I have to take the risk. Of course, price can come back. But I am afraid that like if we go up straight directly, I would be not in the trade. There is a cluster of levels, as you can see. We have midlines. We have midlines from ODR, ADR. We have close and opening prices over here. Plus we have a volume imbalance. So I have to take the risk. Doesn't matter if I get stopped out or not. If price goes lower, we're going to take another trade. Or I'm going to take another trade. My stop loss will be 1-2 ticks below the volume imbalance. And my target will be a new high. Let's take a new high for now. So let's see. So you see we are rejecting from the IDR line. So I don't like it. Should take it out. And we are getting stopped out. That's our first trade of this backtest. So now we are sitting here and we closed both volume imbalances. And as crazy this sounds to you, I directly enter again. Entering here. I'm going to put the stop just 2 ticks below the IDR. Yeah. You see, I was looking at that. That's the double volume imbalance, which I showed you before. So it makes more sense. So I have like literally for this trade, I have 3 levels where price can return. So that's enough for me. Target will be 0.5 standard deviation, which is up here. Yeah, I think we can go above this high. One tick. Yeah, that's enough. Okay, let's go. And stopped out. One more time. So that means session is over for me. That was unfortunate. So let's watch price action. So nice rejection over here. I got wigged out. My stop was too close in this case. Here another nice entry. We are rejecting from here. We're coming back above the volume imbalance. We're coming down to the mid IDR and the volume imbalance, and nice rejection from over here. If I could, I would have taken a trade here and I would have taken a long trade here, but I can't anymore. We are turning back into this area and we are going up. So trade idea was good. At the end of the day, trade would have been filled. Unfortunately, got wigged out, happens. But I hope you see, like, my trades have been like a little bit more risky maybe, but you see the points where you could have entered here. Maybe it was a little bit stupid from me to expect price to rally directly from here. Whenever you have two volume imbalances, it's not so bad to wait for the second one. But I took the risk and I got unlucky down here. But this is a retirement setup. It's literally a picture perfect retirement setup. To the tick, I couldn't take it, doesn't help. But I think and I hope everybody sees how it formed and how it worked out at the end of the day. After this extension, there is not a lot of things which we can do here. Would you want to take another long trade here? Me personally, thinking about what we said when the ODR and the ADR formed, I'm not sure. Like if you take this retirement setup and you take such a trade, or even just from here to here, and you're expecting again price action in the similar fashion like this, so there is a high chance that we might go even lower or breaking the lows again. I think we did everything on the long side. Also, we had like this big buy side liquidity taking out, which means the algo is happy for now. Price goes down, down, down. We are breaking through the IDR levels and we go down and it's a false state. So what we expected was right. So at the end of the day, what I said when we started the day, it can't be more clear what I mean now, right? So that's it for this day. What is a retirement setup? You have the idea, or like literally it's confirmation to one side and then returning to the other side of the DR, preferable below the 75% retracement of IDR low to high. That's a retirement setup. Whenever you have a confirmation to one side or you expect one side to be taken out like we did, it's like I expected long, that's why I took the trades over here even without the confirmation. Literally what you would wait for is confirmation and then return to the other side, and then you take a blind trade into the direction of the confirmation. I am aware that I'm taking this risk and I don't mind because I know how to trust DR. I'm looking literally to make the most out of it. So if it means I'm ending up a day like this with 2 -R, even though I was right, I don't have any problem with it. The time I'm gonna get not stopped out and I'm gonna take such a trade and I make the home run, it's giving me six chances to lose again. And that's like really something which I personally like to do. But I'm also like saying that I teach the people and I tell the people to stop where you take such a trade and you want to be sure it's always below the DR low. It's backtesting, so I'm backtesting how I would trade. But you're absolutely right. If you have the low below here, which is like a very logic and good stop level, I would have not suffered this loss and I would have ended the day with plus.